4. Okay, well, we're just about ready to get started. Good morning, good afternoon, welcome. Thank you so much for your time. For you that may not know me, I'm Chad McDaniel. I'm the president and co-founder of Execs In The Know. And I'll tell you a little bit more about Execs In The Know a couple slides from here. But I do want to say, first of all, thank you so much for your time. I know how busy we all are, and getting this discussion with you is so imperative and very timely. And I'm going to introduce some great guests here, both Jeff and Matt. You're going to enjoy these two gentlemen. They come with some extensive knowledge and understanding to the topic we're going to be discussing today. And really, it's about risky business. And we're going to talk a lot about how risk decision can increase customer lifetime value to us as an organization. But I wanted to pull it down a little bit more to us as CX leaders, because Execs In The Know is a corporate CX sharing leader. And what I think it's really important for us is how we define risk in an organization. Why for the CX leaders, outside of some of the obvious? A lot of times, depending on the level of risk that we dial up or dial down, can have impact. It can have impact on the calls. It can have impact on what we're seeing within contacts itself. Other key thing for us as CX leaders, and why this is so important, is that a lot of times us as CX organization, we can get visible insights, and we can tip off our risk groups, payment risk groups, for early insights and things that we're seeing. And then finally, Matt and Jeff, we're going to talk a little bit about, when is, what is right friction? How much friction do we create, not create, let's say, with an overall customer experience point of view? For our listeners today, this is not just about payments and merchant services. I mean, a lot of us do accept credit card payments on phones or other things, or through our websites and offerings. But it's really about other areas, identity. If there was a breach of data, stealing of data, possibly, Matt, you were telling me about social listening and some abuse that can take involved in social care. So there's many, many elements of this conversation. And I'm going to ask you as our audience, let's take the time to be in the moment together. Let's really lean in as a group. Let's listen to Matt and Jeff. But at the same point, your questions are going to be so important. So please, throughout the conversation, please ask your questions as we go. If this is your first time to Execs In The Know, welcome. We've been, for the last 15 years, a very large corporate CX sharing community. We call it the CX playbook for the CX leader. Leaders learning from leaders. There's many ways to get involved, and I welcome and encourage you. You're not alone in this journey. There's hundreds of other peers that sit in your like-for-like chairs that are sharing best practices and ideas through the community. I wanted to say thank you to our board here, some fantastic leaders and brands that are really elevating our industry, making a difference in what we're all about for future generations and the success of our industry. Thank you to our advisory board, everything you do for Execs In The Know. One of the best things I would recommend after today's conversation, if you're not part of Know It All, this is our private online community. You should join, because we have 24/7 conversations going on, asking the kind of questions and things you'll hear today, amongst many other topics. So make sure you do join our private online community called Execs In The Know. I'm real excited. Matt and Jeff, I don't know your schedules, but Nashville's a great place. We're going to be at our next live event for the community. It's going to be September 22nd. So please mark your calendars. It's always great to see everybody that comes out to our live events and the kind of discussions and engagements we have. All right, I want to jump in. Jeff and Matt, first of all, thank you again for your time. And let's start with some quick introductions. Jeff, for the purpose of our listeners, our audience, quickly a little bit about you, the company, and then we'll turn to Matt.
Thanks, Chad. Great to see everyone. Like Chad said, good morning, good afternoon, good evening, wherever you are in the world. Thank you for listening to this. I'm super excited to have Matt on from Adobe. Matt has a wealth of knowledge, and we're so happy that he was able to join us here. Just as a way of introduction, my name is Jeff Hallenbeck. I lead our financial partnerships team at Forder. For anyone that's not familiar with Forder, Forder is the trust platform for digital commerce. So we help businesses really understand what identity means and where in their business they need to make great identity-based decisions. Adobe being a great partner of ours. Matt, why don't you take a second and introduce yourself to the audience?
Yeah, it's a pleasure to be here. Great to meet everybody. And it's also great to be here with Jeff. Forder's one of the partners of Adobe. Today, I serve as the GM of payments and risk at Adobe. I've spent a little over 25 years in this part of the industry. American Express, eBay, PayPal, Uber pre-IPO, and then most recently joined Adobe about 3 years ago. And two other maybe quick comments about my background. When I think about all the things that I've done over this 25 years, if you take a look at a payment when it's presented online to when the money shows up in a bank account, I've built teams or managed teams, or I've been in roles every single step on the life cycle of a payment. And one thing that I've learned over those 25 years, the customer service organizations and the customer connection is critical to every one of those roles that I've had. When I think back to eBay, this was 2003, there was a program called Voice of the Customer. And we could ask questions and partner with the CX organization and learn more about the payments function that I'm in and figure out how to make it better for our customers. And today at Adobe, the customer service organization, the social listening organization that we have are really key partners to what we do. We get a lot of intel on inbound calls, and if there's something going on in my world that I need to become aware of and figure out how to fine tune, they help us with outbound contacts. There are problems all the time in payments and risk. Maybe we'll get into a few today, but our CS organization has saved us a few times. And then there's just a lot of reporting. We're a global company. There's a lot of complexity in our business, and we can't see everything, but our customer service organization and connections into it are this canary in the coal mine to help us understand when something just doesn't right, and it requires a little bit more attention from my team to figure out how to right size it. So again, pleasure to be here, and hopefully we can share some good knowledge with you guys.
And just real quick, Matt and Jeff, it is an absolute treat. Thank you for your time. I know how busy you guys are as subject matter experts in this discussion topic. To come present and share some of your thought leadership with our community just means the world to us. So again, my hat's off to both of you for taking the time to help us out. So let's lean in. Jeff, you want to go ahead and jump? We've got a lot to talk about here, and let's go.
Yeah, thanks, Chad. So, Matt, before we get into all the problems of fraud, right, I just want to have you shape where you've come from. If you stick to the payments and fraud world that you're in right now, what was that landscape like 10 years ago, 15 years ago, in terms of your role in the organization, who you partnered with, and the level of trust you had to build, and really some of the metrics? I mean, this slide here shows some of the metrics before and after, but take us through your career background and where were you 10 years ago, and what did payments and risk look and feel like on a day-to-day basis?
For sure. I'll even go back 25 years because that's kind of when it all started for me. I started at American Express, which is obviously a payments company. So there was a lot of knowledge and a ton of functions all surrounding that. But when I came to eBay in 2003, payments was viewed more as a commodity. Like the real business was up front. It was all the eBay categories and all the buyers and sellers, and payments kind of got shoved in the back corner. We were told not to bother anybody. The real business was up front, just keep the money coming in. And one of the things that slowly happened over those 25 years, I saw it on steroids at Uber, and now we're trying to build the same thing at Adobe. It's a strategic function for any company in e-commerce. It's not just about accepting a credit card payment or some other form of payment. There are all kinds of relationships that can be created within the financial services industry. At Uber, we had well over $50 million a year that would come in from banks and payment providers that wanted access to our customers, and we do co-marketing campaigns. On the risk side, which is where Jeff and I spend a lot of time working together, it's become this strategic lever to figure out how wide you want to open the front door. Like more friction, you get fewer customers, maybe more customer service contacts. Not enough friction, you end up introducing yourself to a lot of fraud and chargebacks and costs to the company. But I've seen it evolve into a specialty, into a strategic function. Everybody in e-commerce does what we're trying to build here at Adobe. And the analogy I share with my team a lot is I think it used to be a game of checkers, and now it's a game of three-dimensional chess with a lot of complexity that changes very dramatically every year because there's a lot going on, around the world with regulators, with fraudsters, and with all the different players like Forder that are part of the ecosystem to make it work.
Maybe let's dive into that strategic, position that you have at Adobe right now, and maybe walk back a step or two and talk about how did you build that? I want to talk about internal trust. There's, 25 years ago, it was a cost center. Payments was a cost center. You had to drive that number down. In today's world, when we talk to merchants at Forder, it's all about, you've got a top line number too. How can you drive revenue? But, now that all of a sudden opens up all of these different teams within an organization that you need to partner with, you need to strategize with, you need to roadmap with. How did you go about building that trust, and who did you work with in the organization to really elevate the role of a payments and risk team at a company?
Sure. At Adobe, it was very unique for me. I'll talk mostly about Adobe, but then I'll maybe share a couple of thoughts from Uber, where I was at prior to Adobe. Adobe is a 40-year-old company, so we're a pretty mature company, but we didn't have a payments function until I joined 3 years ago. There was a product team and some engineers that would focus on it, but it wasn't a strategic function like we had at Uber and other places. So when I came in here, there wasn't a team. I had to go build out 4 functions from the ground up and hire people from industry in. And the trust building, this is probably less about payments and more about EQ and DQ, which I'll call the decency quotient. How do you get people in the organization to believe what you're saying is true, because I haven't seen it here before, and then to be comfortable with one of the most challenging things that all of us on this call deal with at any company that we're at, and it's change. I think it's human nature to just resist change. If I'm honest with myself, I probably do a fair amount of that. But the level of change that we needed at Adobe was huge because none of this stuff existed. And there's a couple of things that I've done kind of later in my career that I think help support that. But one, you don't want to come in hot and heavy on day one or month one and tell everybody how broken it is and how wrong everything is, and here's what everybody else does. I've done that before and regretted it, probably about 15 years ago in my career. But I spent the first 90 days asking a lot of questions, truly listening and understanding why certain things were the way that they were today. And even if they looked broken to me, a lot of stuff was the right decision 5, 10, 15 years ago, and it made complete sense given, the environment. So it's not that anything was wrong, but it's that the whole industry had evolved. And I would share what we did at Uber. I'd get resources to go prove that it worked. And then we would show through success that we should pour more money into this. We've built out 4 different functions in Adobe. One's a partnership function. We manage our acquiring banks directly and create a lot of mutual value. We route transactions all over the place to maximize success rates. We recently built out a risk function. That's where Adobe's partnered with Jeff and the Forder team. And we've got some data scientists that help look at this in the same way that a company like PayPal would. We have a operations team. Things break all the time when you're in 90 plus countries and you're accepting payments all over the world, and fraudsters are very, very smart and evolved. So we've got a team that is on the front lines of detecting that and then fixing it, either internally or externally or both. And then finally, data is the key at a company like Adobe. We have a strategy function that's folks with really deep SQL skills to dig into the data and understand on a global basis where we need to focus. So maybe going back to how we built that out, it was very slow. When I joined Adobe, I was a one-man show, and I was supposed to get a headcount of, I think, 15 to 20 people out of the gate to go build. And COVID hit. My first day was the first day that the company locked down for COVID, and we all worked from home. So that was a challenge, but I don't know, you just drive forward, kind of the Uber way, you make it happen. And we showed that these partnerships would work at Adobe. Hopefully I don't go on too many tangents here, but at Adobe, a 1 basis point improvement in our payment success rate is worth $7 million to us. And we've improved that by well over 100 basis points in the 3 years that we've been here. It's a huge lever for the company. And after we showed some wins across that front and some wins on the risk front and some wins with routing, then the org bought into it and made a full investment. The last thing that I'd say too, which is probably more about EQ and not a technical function, when these changes happen and you find people in the organization that you partner with, whether it's the engineering department, whether it's legal, whether it's some of the business units that own the Adobe products, whether it's the customer service organization, I found that it's really important to bring those people along for the victory lap and to create a lot of visibility to what they did, how it made this thing successful. So it's not about me, it's not about my team, it's not about the payments function, but it's about winning as a team across a highly matrixed org and a bunch of different functions. That's a recipe for success no matter what you do for business. So hopefully that one landed well and people get that.
I love that. I love winning together just as a mindset. I think that helps really bring teams across an org together. It helps them buy in more. I want to go back as I kind of move these slides forward to our next topic here. I want to go back to something that you said when you joined company or you joined any company as a payments and risk person. It's easy to look at it as broken and to say, why do we do it like this? We need to fix this. We need to adjust this metric. So this topic is around risk as a strategic lever. And I want you to, spend a few minutes as I bump this slide forward and talk about, maybe the challenge for you coming into a new space or any risk or payments person coming to a new company and not just pulling the lever hard, about adjusting the lever. And what does, risk as a strategic lever really mean, and balance and metrics and the relationships that you spoke about, acquiring banks, processors, internal relationships. So spend some time and talk us through risk as a strategy and how you think about adjusting that lever at Adobe.
Yeah, I'm going to give you an example from one of my previous companies, and then I'll talk a little bit about Adobe. But at the highest level, risk and what Forder does with Adobe is all about whether or not you're going to let somebody check out. Really good people are easy to identify. Really bad fraudsters are easy to identify. And then there's this big gray area in the middle at every company that I've been at. And it's really difficult to tell if they're good or bad. So how much risk do you want to take on that gray population? And if you take a lot of risk, you end up dealing with potentially a lot of problems depending on how much risk that you take. And at Adobe and at PayPal, at Uber, if you're trying to grow your customer base, there'll be a strong appetite for taking a lot of risk. But if you abuse that and you take too much risk, the consequence and the cost of that is more contacts into your customer service org. Like if there's stolen credentials that are being used on your site, and your number is displayed on the credit card statement, you're probably going to get a lot more inbound calls. You're probably going to get more chargebacks. And at PayPal, they move money. If you take too much risk and you get chargebacks, that costs you the entire amount of the money that was moved. If you're at Amazon and you're shipping physical goods and you take too much risk and it was purchased on a stolen credit card and sent to a different address, you're out the entire cost of those goods. Now at Adobe, Spotify, Netflix, any digital good provider, there's a different way that I would think about risk. We're a digital good. the marginal cost of another product is essentially zero. So we're not out money, we're not out merchandise, but we need to make sure that we manage risk appropriately. And if we, on one hand, let everybody check out, we would get cited by Visa and MasterCard. They would potentially give us warnings that could escalate into fines. And if you can't clean your house up and you're sending a lot of bad traffic through, they'll eventually just shut you down and not allow you to accept those credit cards in certain countries or even globally. And then you're probably familiar with this stuff, Jeff, but like a 1% limit is probably where you start getting into trouble with the Visa and MasterCard. But even well below that, if you send a lot of bad transactions to any bank, you eventually look like you're not a good actor in the ecosystem and that you're not taking good care of the cards from that bank that come through the front door of your business. And their risk decisioning systems in an automated fashion through, artificial intelligence and machine learning and rules and models will just start declining a lot more transactions for your business. So you end up harming your business, harming your revenue stream, and you get punished if you take too much risk. And on the other hand, if you don't take enough risk, then you're kind of keeping the front door shut really tight, and you're restricting the number of customers that you allow to buy your product. So there's a balance between the two.
Yeah, I want to get into profit efficiency on the next slide, but let's hone in on the last bullet here. And there's lots of upside, certainly. There's lots of downside. I'm going to give you a little bit of a leading question here, which
Sure.
is to touch on automation and how important it is to have systems, solutions in place that can help automate, your operations, your decisions, things like
Sure.
that, in order to let your team safely test and learn. A lot of downsides,
Yep.
a lot of upsides. So you got to test and learn and find balance. But how do you do that quickly? And how much does automation help enable that?
Yeah, I guess when you mention automation, I'll think about a couple of things in the risk space. One is on our chargeback flow. When we do get it wrong or we have friendly fraud, which I think we're going to talk about later, when the chargebacks come in, you can either hire an army of people to deal with that. That's very expensive. Or you can just accept the chargebacks and post them as losses. That's very expensive. Or you can find ways to automate the different things that banks care about to go dispute the front end. When you think about risk decisioning, companies like Forder take a lot of the heavy lifting off of an Adobe or other players that use that as the risk decisioning platform. We're very ambitious. We want to take some risks and experiment and have a control group. But it's good to have somebody that can automate a lot of that, not just for Adobe, but to kind of take a look at what's going on across the entire ecosystem. A bad actor at Adobe probably has already been a bad actor at a bunch of other companies in the ecosystem. So a third party can automate that. The one thing I would caution on automation is sometimes it can take things in a direction that you didn't intend. Maybe that's good, maybe that's bad. But I think it's always good to keep your finger on the pulse through data and monitoring and kind of fine tuning and not lean in completely on automation. And I don't know if those are the topics you were referring to, Jeff, but if not, maybe you hit me with another kind of thought on where you're going.
No, you're spot on. Really, again, at Forder, we think automation enables testing. What we don't want for our merchants is to say, I want a chargeback rate of 20 basis points, and it just sits there forever, right? We want to always be getting better. And I think, in my opinion, at least given my experience in the merchant side of the world, if you're stuck with a lot of manual processes in place, your ability to test and kind of move that needle up and down is really difficult. You have to go ask everyone, and their sister to do work for you just to implement one little test. And really the idea and the concept of test and learn is iterate, win some, miss some, but just get better incrementally over time. So for me, automation is a big component of that. I do agree with you that automation comes with risk. It comes with, hey, if we were to move fast, we might miss some, but your ability to test more frequently is going to help you win in the long run, I think.
Hey, I'm actually going to take advantage of the audience that we have here when we talk about automation. I think there's a bunch of customer service or customer experience leaders. Automation, when you call in anywhere, is good and routing, but as soon as you're hitting like too many options and you're going through an automated flow for 2 or 3 minutes, I'd encourage all of you to maybe think about that as well. So a little bit off topic, but automation is great, but too much of it, I think, can deliver some unintended maybe consequences, customer experience consequences, or in the risk space, maybe loss consequences or customers getting blocked consequences.
Absolutely. Great point. Should fully agree with you on that one. Okay, let's talk metrics. I love this new concept of profit efficiency. I think, as a data guy myself, it really draws my attention to a unique metric that's kind of emerged over the last 2 or 3 years in the risk space. But I want to go back to something you said about network limits, the 1%, 150 basis points, Visa, MasterCard lines that they've kind of drawn in the stand as an ecosystem. That I feel like that's where we've been. Where are we going in your mind in terms of measuring payment risk the right way and making sure that that balance is right, whether you're digital goods, physical goods, Internet of Things, pick your business type. We want to make sure that everyone can measure risk the right way, not necessarily just define risk once for the industry. So what are your views on metrics?
Yeah, for sure. So I think with risk, or how you measure it, or the level of risk that you're going to take, it's never set it and forget it. We take a look at a handful of metrics around our risk decisioning. One is what we would call false positives. And for anybody on the call not familiar with that, if you block somebody, they're in the gray area, but you block somebody and they're a really good customer that shouldn't get blocked, that's what we call a false positive. And then if you let somebody through that should have been blocked, they're a bad actor or a fraudster, and you end up getting a chargeback later on, those are the false negatives. And we'll take a look at the ratio of both of those. We'll spend a ton of time looking at chargebacks, and we also have in place a control group. So while Forder can give us a decision, a yes or a no, or a range of scores where we can think about our risk appetite, if we let 1% is typically what companies will use, 1% of the transactions go through and not look at the decision that came out of the Forder engine, we'll see what happens to those and find out how many we got right, how many are customers in this gray area where maybe we can think differently about that. And then we'll partner with Forder or internally kind of take a look at what other types of customers look like that customer. The cost of getting it wrong is a metric that a lot of companies spend more time on than we do at Adobe, because we're a digital good, because the cost of a mistake to our business in dollars is zero. We are willing to take a little bit more risk, or certain times of the year, we might want to take more risk when we've got a lot of volume coming to our website. Customer service is another one of those metrics that we take a look at. Similar to the false positives and the false negatives, if we make changes in the payment flow or changes in the risk decisioning flow, if we see a spike in calls or contacts through the online chat, or things show up in our social media listening platform, that'll be a cue for us that maybe we didn't get it right. And I don't know that you ever get the risk appetite right, and you can't set it and forget it. It's always this balancing act where sometimes you will accept more risk, and hopefully you get more reward from that, but it always comes with a little bit of pain, and you just need to kind of balance it out constantly.
Speak a little bit of the relationships aspect of that too. I think it's one thing to measure it really well on your side. I mean, clearly you guys have an awesome measurement plan in place. You have tons of metrics: false positive, false declines, profit margins, understanding cost when you get it wrong. The rest of the ecosystem, the card brands, the banks, let's take banks as an example, right? They have to deal with tons of merchants. So how does the relationship aspect come into play when you think about definitions of success? Adobe has theirs, but how do you fit into other definitions of success that exist out there in the ecosystem?
Sure. For sure. So, let me talk about banks first, and then I can talk about Visa and MasterCard and the other networks. But banks are all regulated. Doesn't matter what country you're in for the most part, but they're regulated and they're not in the business of taking risk. I am. I want to take some risk and see if I can generate more revenue for the company. But banks make money by not taking risk and managing risk very tightly. So for us, when we can send more information to a bank, for example, one of the things that Forder has and that we're seeing evolve in the industry is rather than just send a credit card number in and an expiration date with a few other data points and find out if the bank will approve it or not, there's additional data that can get sent to the bank, like a risk score or other information that gives the bank a little bit more confidence that they're not taking a lot of risk. Also, when we experiment in some areas, for example, Chase, a big bank in the United States, they acquire transactions, process our credit card transactions, and they're also an issuer. So there are things that we can do directly with Chase and then talk with them about what we're doing, what's changing, what they're seeing, and then fine tune that to roll it out potentially to other places. With the Visa and MasterCard, earlier in my career, I was in the receiving end of some warnings that we got from them because we didn't manage risk the right way. Or I got great stories here, but e-commerce was pretty new, back in the early 2000s. And when I joined eBay in 2003, Visa and MasterCard hadn't evolved to catch up to everything going on in e-commerce. But we kind of didn't care. We did what we thought we needed to do and what would be right. If it doesn't line up with their definition of how the payments ecosystem should work, they call you out, they threaten to fine you, and even worse, maybe shut you down. But a lot of those things are standard regulatory requirements in the e-commerce space today. And if you take too much risk, the Visa network and the MasterCard network, especially if you get close to like 100 basis points or over it, you'll absolutely get cited. You'll be viewed as a bad actor in the ecosystem. And there's an expectation. There's fines and penalties and also carrots. But there are a lot of reasons why you don't want to get anywhere near some of these thresholds that the networks have because they can make your life difficult. And then the customers will just have a horrible experience with their bank and with the merchant they're transacting with.
Yeah, I totally agree. And I maybe even tack on to your comments there, Matt, about regulatory bodies, Australia, India, OSPANet, RBI, we've seen PSD2,
Yep.
Heavy regulation in Europe. This concept of controlling risk at a static regulated level seems to just be getting bigger. So that challenge of, hey, not every business should have the exact same chargeback rate, right? Like that's a big challenge. And I think it's important for merchants, merchant industry groups, right? Execs in the know to come together and really be open about that dialogue of profit efficiency, why it's important, why
Yep.
card brands, regulating bodies need to understand, hey, we're Adobe. We can take risk given the nature of our business. We shouldn't be measured the same as other businesses out there in the world, but it's also a big challenge. And I get that from a regulating standpoint. So, all right, let's stay on.
One other quick thought to add to that. I agree completely. Every merchant shouldn't have the same risk appetite or the same chargeback level. And I'd go even further to say that every merchant's chargeback level and risk appetite shouldn't stay constant, all 12 months of the year. There are times to take some risk and open the door up. And when you can't do that for 12 months or you'll get punished by Visa and MasterCard and the banks, there are pockets of time when I think it makes sense to do that, open it up and then close it down to achieve a business purpose.
Yep. I love that. Being dynamic. Absolutely. All right. Let's do a little plug here for Visa, right? Big news this week. Visa's compelling evidence program finally is coming to market. It's going to introduce a lot of change for merchants, for banks, for all of the players in the middle, Forder included. It's all about addressing this topic of friendly fraud. first-party fraud, first-party misuse, abuse, call it what you will, but it's a challenge. It's been there for years and years in the e-commerce space and even in the physical goods space for a long time. Let's pause on this slide, and Matt, just give folks on this call, if they're not familiar with friendly fraud, give them your definition. What does friendly fraud mean to you?
For sure. In fact, I think the best way to understand it is to first say what fraud is and then say what friendly fraud is. But an example of fraud is somebody steals your credit card number, they use it online, they purchase something that you didn't buy and they have it shipped to them. It doesn't show up at your house. They're stealing. It's easy to understand that. Friendly fraud, an example of that would be you're using your own credit card. You've decided you want to purchase something, maybe an Adobe product and subscription. You use it for a month or two, and then you decide that you've got buyer's remorse. And rather than call the merchant or Adobe, you call your bank and you say, I didn't purchase this product. And then the bank will send a chargeback. So that I think is the easiest way to understand what friendly fraud is. And to comment, Jeff, on the Visa Compelling Evidence Program, something that I think is going to be really relevant for the audience is people that do what Jeff does and what I do. We love this program. We think it holds people accountable for decisions that they've made, and it doesn't, cause a bunch of chargebacks. But what it will do is it's probably going to cause a spike in inbound contacts to any merchant. If you can't call your bank and say, I didn't do this, which is a little bit of a stretch, charge it back, and then the charge doesn't disappear, that's when they're going to definitely pick the phone up and call Adobe or call whatever organizations you guys represent there. So probably worth understanding that in a little bit more detail, and to be connected with whoever in your organization does what I do, to understand how your company is going to deal with that, when they're going to make changes, and whether or not you should expect maybe a different customer experience that can cause inbound contacts.
Yeah, and being prepared, right? Like understanding the policies. Where do you sit in terms of abuse? If it's a good customer that's been with you for 10 years, is your policy the same as someone who just was guest checkout one-time purchase? Probably not. So I agree with you. I think there's going to be, as we learn, as with any program, right? It's not going to be perfect out of the gates, but as we learn the ramifications of this compelling evidence program and what the industry, being prepared internally, merchants and businesses really need to understand their policies around abuse, contacts. What is the definition of a good customer, and lifetime value? Really understanding that is.
Lifetime value is super important. As a digital good, when we're not out money or the cost of merchandise, if we make a mistake, our philosophy is to maybe not take as hard of a line on friendly fraud or other types of abuse. We want people to use our product. We believe that if they use it, they're going to love it. And that the more they love it, the higher the switching costs will be for them to go find a competitor. So, it's another flavor of how we think about that, where maybe we don't take advantage of everything that the Visa Compelling Evidence Program offers.
Yep.
And Jeff, I've got an example that I know you're familiar with, but I'd love to share something that we did in the friendly fraud space down in Mexico. Is this okay to jump in here?
You do, yeah.
So, as I said earlier, data is what we use to understand everything that's going on in our business. And year and a half, maybe 2 years ago, we discovered that one of the banks in Mexico had a very different approval rate for card transactions and checkout compared to the other large banks. It was dramatically different. And my immediate thought was something's broken at Adobe. So we took a look at everything. We talked to our bank acquiring partner. We talked to our risk decision provider. We found some issues that we cleaned up, but it didn't explain what was going on. And we looked at all the chargebacks that were coming in, and we discovered that these weren't really fraudsters. They were more of the friendly fraud where they're using the product. They've used it in the past. They had buyer's remorse, and they would call the bank. And what was happening to Adobe is this bank was basically punishing us. If the chargeback numbers get too high, the bank really doesn't know the difference between friendly fraud and regular fraud. It just looks like we're a bad actor. So through Forder, we were able to connect with the bank and to get an audience to explain to them what we saw in our data. Over the course of several meetings, probably a good month, they were convinced. They agreed with us and what we were seeing. And overnight, they flipped a switch inside the risk decisioning platform of this bank, and our approval rate went up by 1,400 basis points from one day to the next. And in my industry, if you can get a 3 to 5 basis point improvement anywhere, that's a huge celebration. It's really hard to do, but we had a 1,400 basis point improvement. Now, Mexico is a unique environment. It's more like the wild, wild west in payments. But the point is, the level of risk that you take comes with consequences. And that friendly fraud is one of these unfortunate things that can kind of cloud how a bank views you as a merchant, or how Visa and MasterCard view you as a merchant.
I love this story, Matt. I think for me, what I take out of this is going back to our conversation around metrics a few slides back. You can have all the metrics in the world and you can understand your true fraud rate versus what the network's fraud rate is, right? And if you're really great about measuring and data inside your organization, hey, maybe my true fraud rate is really low, but my chargeback rate is higher because of the difference is friendly fraud. But having a relationship and having multiple relationships out in the industry, whether it's the banks, whether it's the acquirers, whether it's the card brands, when something like this pops up, not everyone measures the same way. And so you have to lean into those relationships and start to share your data, your insights out there and say, hey, here's what I'm seeing. What are you seeing? Because on the other side of the fence, it might not be as clear as you think it is. So again, that's my...
Sorry, let me let you finish, Jeff.
No, that's my pitch to the audience here is don't internalize all your data. Having relationships, building those out in the industry, you will need it eventually. Even if you don't need to lean on it today, when an issue like this comes up, the reason Adobe and forwarder merchants in general can help solve this is because of relationships that we keep and maintain. So I think it's super.
Hey, the other thing too that's equally important, I've made this mistake earlier in my career. We went to a different issuing bank. It wasn't in Mexico, and said that there's a problem. And I didn't do my homework. The problem had nothing to do with the bank. It was a problem that we had at PayPal. And as soon as it's really hard to get in front of a bank. If you have connections and relationships, that helps. There are other avenues that also help. But if you get in front of the bank and you didn't do your homework and it's not a bank problem, I guarantee they'll never meet with you again. So you want to, the first move shouldn't be to go to the bank and ask them why their credit card approval rates are lower than everybody else, that they are competitors of that bank in that market. It's to really work with your acquiring bank partner to peel back enough, and your risk decisioning provider to peel back enough layers and make sure that your house is clean before you go sit in front of a bank and ask them to go figure out what the problem is on their end.
Absolutely. They love data at a bank. That's the truth for sure. Well, let's talk about that. Let's talk about the data a bank gets. This is a Forwarder branded slide, and I'll spend a minute and just talk about where Forwarder sees the ecosystem moving. Traditionally the 1980s, right, that the old ISO 8583 payments message that unfortunately has been kind of ported over to the e-commerce world. There's just not that much data sent to a bank. On the left side of this slide, you see generally what a bank gets. And, Matt, you touched on it earlier, right? They get a card number, expiration date, and amount. Yeah. And they're supposed to make a risk decision a lot of times just on their own. At Forwarder, what we believe in is, expanding that horizon of data for a bank and providing them the right access to build their risk model and understand, where tolerance sits and what's being purchased and who the identity is behind that purchase. We've seen a couple attempts at this in the industry to standardize this, right? Not to go bank to bank and figure out what data points matter. We've seen Visa come out with 3DS1, introduced a lot of friction. 3DS2 has since evolved that landscape. But let me pause there and just ask you the question, what data points matter to a bank in your opinion, and how do we get it to them? And at what point in the transaction?
Yeah. This one's really interesting to me, and the industry is absolutely evolving to provide more information to banks, but it needs to be in a consolidated way. Like banks aren't going to put a special connection in for just Adobe. Some of the things that you guys are doing at Forder, where you're this common pipe into a single bank for hundreds, thousands of different merchants, that I think is a solution that resonates in the industry. And back to the customer friction. If we have to ask for a bunch of other data points from the customer that they have to type in, I think that sometimes that's necessary, but that isn't a winning strategy from my perspective. Things like machine ID, like if this credit card has been used on this and a machine ID is specific to a computer or some device, if there's a bunch of successful transactions with a particular card on the same machine ID, and we can let a bank know that gives them, I think, almost a surefire bet that it's the same person that's on that computer. Never 100%, but those type of, I'll call it frictionless data points that we can grab in the checkout flow without requiring the customer to do anything else, I think are big winning strategies. The other thing that, Jeff, you can probably even talk more about, partners like Forder have a lot of data points, a lot of complexity, and they come up with a score. And a score, depending on how high or low it is, will give you a sense of how confident we as a merchant should be, or potentially an issuing bank should be, that that's a good transaction and that there shouldn't be a chargeback or fraud attached to it. So sometimes a consolidated score that's trusted by the bank is very, very valuable. And for other banks, maybe a very specific piece of information like a machine ID is something that they can take into their own decisioning system to make better decisions and to deal with what I'll call that gray area between good customers and bad customers, to give more visibility to whether or not that gray population should get approved or declined.
Yeah, for sure. And let's hone into the timing of this data too, because I do think it's important, speaking on the bank's side of the world here for a second, when you get me this data. Merchants have historically been decent, I would say, about getting detailed transaction level data, but it's been at the chargeback representment level. After fraud has occurred, then you tell me what happened. How important is it to get this data sooner to a bank to deflect call volume to merchant, call volume to the bank, customer confusion, right? Like, talk about the journey as to, okay, if we agree on the payload, how early can I actually get it to a bank, and what are the benefits of that?
Well, everything, not just the industry that I'm in, but everything's instant now, right? So a lot of this stuff that, to your point, maybe it would happen later, weeks later in the chargeback flow or months later in the chargeback flow. A lot of stuff happens within milliseconds, like before somebody hits the submit button to make a purchase, or right as they're hitting it and before they get a response back that says approved, congratulations. There's a lot of information that gets passed back and forth between us and a partner like Forder, or between us and a banking partner that is trying to make a decision. So I think that stuff is instantaneous now. And I think the level of data that can get passed then, hopefully this isn't too technical, but like 3DS rails usually require a customer to type in more information. But some of the folks that are in my part of the industry have discovered that you can pass certain data elements on these 3DS rails without requiring any sort of friction or request from the customer. And those are the type of things that I think are going to keep evolving. There's even solutions I've seen where before somebody provides information, they don't even type in their email address or their address or their payment information. There are some solutions out there where that customer is a PayPal customer, for example, and they've got all kinds of information about them before they even check out. So I think instant. And then you've got to balance how much friction you're willing to put in front of your customer. If some of these things are customer provided data points, we don't like friction. We're digital good. If we make a mistake, we just give the money back. But if you're a PayPal and you're moving money, or an Amazon and you're moving physical goods, you might want a little bit more friction, not for every customer, but for certain customers that you can't really tell if they're good or bad customers. You can't tell if it's a stolen credential or not. Then maybe you introduce friction in that transaction to manage the balance between revenue and then losses that you're going to get on the chargeback flow.
I love that. I love that. All right, we got about 10 minutes left here. I want to talk about what's next. I've got two questions here, Matt. They're very open-ended. The first question, what's got you and your team excited in the next 6, 12, 18 months about what's happening either at Adobe or in the industry? And the second question is the opposite of that. What keeps you up at night? What do you see coming that you're concerned about and that you need to build a strategy around?
Yeah, let me start with the second one, because this is a new area that we're building out at Adobe, and specific to this topic, by the way, with risk decisioning. If you make a mistake, sometimes it's hard to recover from that. You're in checkout, the customer's present, and if you decide to block that customer or you roll out some kind of change and you make a mistake and you impact that customer and they can't check out, they might not come back. At every company that I've been at, my entire career, this seems to happen over and over again. It only happened to me once, so usually someone else has that function. But you can't. You need the ability to test and try in an offline environment where your customer is not going to get impacted. And when you roll things out, you definitely need the ability to. You need an easy button, a big red button on the side of your desk, and you just hit it, and then it rolls back whatever change that you had, or the ability to quickly react and turn that off. So the thing that keeps me up at night is this is a new muscle for Adobe. Most companies that I've been at have this, and it's evolved, but it's new to us. And I need to make sure that the entire organization, including the cross-functional teams that I work with in engineering, that they understand how risky some of these changes are that we're trying to make, and the type of impact that it can have on the company. Like, you get this wrong, this is something that the CEO of the company will see, because it can cut off a lot of revenue at the front door, and it could cause, a material impact to financial returns. So I think a lot about that, and we move slowly to not introduce too much change without the right controls in place. And then the thing that I'm excited about is, I came in here with a blank sheet of paper. I feel really fortunate to be at Adobe at this point in their life cycle, but we're essentially a startup inside a mature 40-plus-year-old company. We're introducing a lot of change at Adobe. To me, that's always exciting. And we're pushing the envelope on a lot of fronts. We're doing things that not only Adobe doesn't do yet, but we're doing things that nobody in the industry has done yet. So we're really trying to push the envelope on all the fronts, like whether it's what we're doing in the risk space or even on the partnership side, different types of things that are very relevant to a subscription type business are things that we're trying to unlock. Comes with a level of failure, but no risk, no reward. And I get my blood pumping when we put it all on the line, and we're trying to figure out how to win big.
Well, thank you on behalf of course, Forder, but on the rest of the industry for pushing that envelope. We appreciate it. We think that, Adobe and other merchants like you out there are the reason this industry moves forward, right? The reason that we test and figure out, hey, this data point matters, and what protocol should this data point land in? So again, thank you so much for not just taking the time today, but for doing what you do every day at Adobe and the work you do in the industry. It is very much appreciated. Thanks, Matt.
Yep. Hey, you got it. It was a pleasure being here, and great to be on stage with you here, Jeff. We appreciate what Forder does. You guys have been a great partner to us, and you're opening up the door for us to kind of take more risk. And also the audience at Execs In The Know, I hope some of this was relevant. And, the closing thought that I'll put out there, I think is very relevant to the group. The customer service function here and at every company I've been at is a really important partner to the payments function. So if anyone in the audience doesn't know who does that at your company, or hopefully we've given you a little bit of an idea of what they do, be a great person for you to meet and connect with. And then you'll be surprised at how many different points of intersection there are where you can help each other out and deliver a much better experience for the customers of your company.
Awesome.
Well said,
Chad,
Matt, and I couldn't agree more. Yeah, I was just going to say, Matt, well said. I couldn't agree more. And for our CX audience, Matt, if I was the vice president of customer service at Adobe, I'd be very fortunate to have you in our organization. So they're blessed to have you. Matt, I think you had said that earlier in a conversation with me that was it 80% of your revenue is a B2C model, or was it higher than that?
Yep.
It was the line.
I did
Somewhere
say
in
that,
that
and
range.
Yep. 80%. Actually, the higher percentage was individuals, and it could be, sole props or individuals, but 80% are individuals, and then roughly 20 are businesses. And that was a big surprise to me when I came in to Adobe. I thought it would be almost the opposite of that.
Yeah, I felt the same way when you told me that. I was in the same sort of shock. One thing I'll promise you, Matt, that is if I ever try I use your products, but if I ever try a product and I don't like it, I'll make sure to call you, not the bank, to do that. But
you don't have to call the bank. You don't have to call our customer service shop. You can just give me a direct call and I'll take care of you.
Jeff, we got a couple of questions. I want to make sure we give it the limited time. And if we have a little more, from a CX perspective, wanted to talk about some what's next when I think of ChatGPT and generative AI and those things. But let me get to the audience questions quickly. Jeff, I'll just kind of I'll shorten this a bit, but PCI compliance standards require merchants to consistently adhere to PCI standards, council's guidelines. I guess they're known as the payment card industry data security standards, something like that. When assessing risk, this is kind of the question comment. Some companies have gone above and beyond the requirement, especially when expanded work from home. And I hear that frequently. The question is, what is your perspective on what a company should do? Or just a quick comment there.
Yeah, obviously, look, we want to protect data. I think the PCI standards are there so that companies have guidelines to help them understand, look, you got to keep customer data safe, whether it's credit cards or social security numbers or date of birth, right? There's lots of sensitive data that businesses have, and you want to protect it. The other side of that, though, and this is kind of what I'd stress every business to really look at and understand and evaluate, is you have to make sure you've got optionality. A really easy example in the payments world is tokenizing, right? And tokenize your card numbers. That's great. Yes, everyone should do that, but understand what that does in terms of limiting your ability to route transactions. Matt at Adobe, they have a great team there. They have lots of routing options. They have to take into consideration, how do I tokenize a card and still have debit routing choice, still have processor choice? So my very short version to answer that, PCI and data security question is, yes, data security is paramount, but understand the downsides of over protecting data. When you go about building your strategy, just like anything else, it's not just max out one metric, it's balance, and balance that based on your organization's, own risk appetite.
Could I add one thought to that? At Adobe, we took a step back and asked, what do we want to be excellent at? And when it comes to PCI compliance, which is protecting card credentials, we decided that we want to be excellent at Photoshop and PDF in our entire product portfolio. So another option is to outsource where your cards are held to a vault that your acquiring bank has. And then you don't necessarily have to go build out that expertise, because you need to be excellent at it, or you introduce a lot of risk to your company if the vault gets compromised and all the credit cards are stolen.
Thank you. A couple quick ones, and I have a suggestion because we're going to be running out of time here. Jeff, if I'm a CX leader listening to this, can you quickly remind me what Forder does and why, or what kind of product would I consider or look to engage? Do you want to just quickly share that so our audience is aware?
Sure. Yeah. In a nutshell, Forder is a trust platform. So we help businesses understand when to trust an interaction with an end user, whether it's at the time of sign up, login, payment, abuse, refund, right? There's tons of points of interaction for your business where you need to make a decision about the identity on the other end. Is this a good user, a bad user, someone in the middle? And in order to understand and really like make a great decision on these billions of interactions your business has to make today, you need a strong partner. You need a partner who's great with data, who's great at modeling, and can help you make clean, automated decisions in real time. That's what Forder offers.
And it doesn't have to be just if I take payment or am I taking credit cards over the phone. It's regardless, correct?
Absolutely.
Payment.
Any digital interaction, right? You're going to want to understand the entity on the other side.
The reason I asked that quickly is that I want the audience to understand, first of all, Forder, you've been a great trusted community partner of Execs in the Know. We need more of your advice, your guidance in our community, because the fraudsters and what's taking place is just, unbelievable. What I would like to suggest is we do a second conversation about what's next when we think of these new technologies and how fraud is looking and considering. We're thinking of generative AI, chat GPT, and just some other areas. So Jeff, if you'd be willing to come back at some point and we kind of talk about some of these future technologies and fraud, that would be fantastic. Nathan wanted to ask Matt real quick, what was the number one thing that you were excited about? He wanted to hear that again. Just you must have said something that intrigued him.
I think I said a lot of things, but for me, we're kind of a startup inside of a very mature company. So we're driving a lot of change here. And for me, if I had to choose one thing, the partnerships that we're creating all over the world, Japan, Europe, United States, nothing down in Latin America yet, to create this partnership between us and banks and us and payment providers has been a lot of fun. It's unlocked a tremendous amount of value for both Adobe and our partners.
Well, I want to say, Matt, you are a fantastic case study. Forder is so blessed to have you as one of their client organizations. Matt, we would love to work with you in the future. Thank you so much for your time. Jeff, thank you for the continued partnership. We're out of time, but I just want to say to our community, you're not in this alone. Stay connected. Join the Kia, the Execs In The Know online community. We're going to ask Jeff to come back to continue to help us through some of these changing situations. But at the end of the day, thank you for your listenership. We're out of time and just want to wish you the rest of a great day and the week that we have. Jeff and Matt, you've been wonderful. Thank you so much.
You got it. Thank you.
Thanks,
appreciate it, everybody.